Hi and welcome back to Siren Crypto. I'm Becky and today's video is part 3 in our trading psychology series. In this video I'm going to touch on something that I hope can make a real difference to your trading profitability. We're going to mix this one up a little bit and talk about risk and reward within trading psychology, but also a little of trading strategy too. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. Now let me try to explain. When it comes to trading, one of the things we want to look for, because trading is a game of probabilities, we want to look for trades that hopefully give us a probability of a good profit that's significantly more than the money we're risking. Let's have a look at this from a theoretical point of view. Then we'll have a look at some real examples from the market. Now let's say whatever market it is, the shape of the market has, let's say, been looking something like this in recent weeks. For example, the lower level here is around 90, let's say that's $90. And, buyers have come back in and lifted this market up and maybe lifted it as high as around the $150 mark. Therefore, we've seen reasonably strong moves of this level. Now, let's say the market is now trading at $100 to buy. So to me, that looks like a good trade. Because if I'm a buyer at $100 and I have my stop loss somewhere at around $85, just to explain what a stop loss is, if the market drops to $85, I'll cut the trade for a small, manageable loss. So that's my risk, and every sensible trader should have a level that if it doesn't work out like they think it will, then they'll be able to get out of the trade and live to trade another day. So my risk there is $15. However, on the upside, if the market gets to where I think it's going to get to, I've got $50 potential profit in this trade. So in this example, I'm risking losing $15, whether it's crypto, the price of gold, etc., to try and make 50. From a probabilities and a reward versus risk point of view, that's the sort of trade that makes sense. If everything stacks up, we could be looking at doing that every day. We have touched on in the past how some traders' losses end up being bigger than their winners. What we actually want are situations like this where our potential profit is a lot more than our potential loss. Okay, let's have a look at a real market now. This is Bitcoin against US dollar Tether. Bitcoin against Tether is one of the most popular markets out there. This is the sort of thing I'm talking about. You can see it here. Bitcoin dipped to around $7,500. And then you can see the market moving strongly off this level up to $13,500. In the meantime, the market is bouncing up and down just like it did in the example earlier. So for me, if we're buying in at around the $7,500 level, we're seeing that level hold. It looks to be a pretty good point to get in. We're assuming the low from before is an important one and the market is going to bounce. Then our stop loss goes the other side of that lower level. We then have a relatively low level of risk. So our stop loss is around $200 or so loss, or around 5% in this case. However, our potential profit, if the market is going to repeat, if it does what it did before, our reward is something like $5,900 or 77% or so potential profit. I must stress that this doesn't work all the time, as you would just sit there and trade and double all the money in the world. But as a way of stacking up low risk, high reward trading opportunities, this is a really key part of the trader psychology. It's waiting for the right opportunity to come along where your potential reward is a lot bigger than the money you are putting at risk. Hopefully, as this chart demonstrates, these kind of trades are out there every single day. We just need a bit of patience and that all-important discipline for these setups to happen. Well, that's it for this video on trading psychology. Look out for our next videos on trading psychology and trading strategies. If you like this video, give us a thumbs up. Make sure you don't miss out on all of our videos by clicking the subscribe button. You'll get notified when our next lesson is uploaded. Well, I'm Becky. Thanks for watching Siren Crypto, and I'll see you on the next video. Happy trading!